Vincenzo's Gold Crypto Investing this March the 14th, 2025, 11:30 a.m. lunchtime update from just north of downtown Detroit, outside the Vincenzo's compound, under a gorgeous, glowing, beautiful sunshine with just some high cirrus clouds moving in from the southwest. Jay, do you know what the temperature is at Metro Airport? No, what is it? 51 degrees, Jay. Well, thank you for that. The audience was waiting for that. We ask you to bell notification and comment down below and like the channel and share to get this truth and education and, most importantly, information out to a growing and wider audience that we need to impact so that they have the information and education and they're not being fleeced and shysted by the infiltrated influencers on social media and in the mainstream. They're getting the facts that you need to make an educated decision, and that's the movement that we're building here, to educate everybody and to give everybody the information and breaking news that you need. If we look at the daily time frame, we talked about the last couple of days. We're going to have to put this on focus real quick. Do not disturb or we're going to get disturbed. We talked about the last couple of days. We were getting close to that 73,000, and we were talking about back here earlier this week that we could have a nice bounce or a slight bounce before we hit the 73, or after you hit it, that could bring you back up between the 100-day moving average and the falling and newly founded yesterday bearish cross 50-day moving average that is now down to 91,005, and the 100-day moving average is sitting just above it at 91,400. We were talking about how you could have a little bit of a bounce and you could get above that and then trade rate or just south of that falling 50-day. And then there's a major upper resistance at 91,442.47. And that could be what drives you down to actually make contact with this underneath $73,000. So we're paying attention for that. We did have a little bounce like we were talking about. If we go into the hour time frame, you can see that this is the second part of this bounce. We're just above the 200-day moving average now on this last spike, but we started to bounce back here on Monday, and then Tuesday and Wednesday we just signed a slow snake-like slithering to the upside. Then we had a little bit of a decline. Now we're on our second push or rally, and it just got us above that 85,602.49 200-day moving average. So we're going to look to see if we trade now. Maybe this weekend we could have a prolonged trading in between that 50 up there at 91,100 and the 200-day moving average, and we bounce around in that range this weekend before we make our next major decisive decision, whether we break back up out of that or we fall down to that $73,000. So everything's going according to plan here. We do know we're in this head and shoulders topping out reversal pattern, part of the first mover advantage. So there's nothing that we're seeing here that's indicating that this has changed. It's just a telegraphed rally, sort of like this was, that was hyper-induced because of that news they dumped on an early Sunday morning. So that's what we're watching out. We had the bearish cross. Now we're watching for the golden bearish cross when the 50 gets underneath that 200 that's sitting down there at 85,602. So we're going to watch out for that there. The XLM price, we were also talking about the last few days, how we could have a nice rally off this 25-cent level after we've had the bearish cross now. And we have the 50 that's trending even farther down now to about 32.321 cents. The 200 days just, or the 100-day in blue is just above that. The 200-day in green is running parallel at 28.5 cents. We talked about how you could have a little bit of a bounce here off of this major area of 25 cents. And then just like Bitcoin, you could trade between the 200 and the falling 50, maybe up to 31, maybe 32 cents, and then that might get you rejected, and that would be our next rejection point to bring you down to the 18 cents, where you could have a very substantial rally, where you could go from around that 18-cent level all the way back up to potentially as high as 33, 34, maybe even 35 cents, which would be getting close to 75 to 100% pump from that 18-cent level. So that's a rally watch that I'm putting in effect here based off a technical target being hit, and not saying that that's the start of another bull run, but that could be the next potential big rally, just like you had back here and you had back there after two big dumps for where the price was at the time, right? And that's what we could be looking at there. And XLM, the same thing with XRP. It's bouncing off of just above the 200-day moving average and the neckline at about 209. And we're in this head and shoulders topping out reversal pattern, something you got here with the first mover advantage. Just like the other coins, we were talking about the potential bounce off of this area of support, and it is. And now it's trending up close to the 50-day moving average in the daily time frame. And that would be an area by the 50-day moving average or that 255, 256 red area. That's your major rejection points to watch, and that's what we've been targeting since we were talking about a potential small bounce here. And then I believe at that next rejection, whether it's at the 245 level or it comes all the way up to the 256 to 258, that's on your next drop. That's when you're going to finally hit this 200-day moving average in the daily time frame. Something else I did wanted to briefly touch upon, the gold bullion earlier today, and now it's starting to fall off a little bit. We did hit $3,000 an ounce in the physical yellow beautiful bullion for the first time ever. Gold exceeds 3,000 with plenty of room to climb further. Commodities roundup. We've been talking about the $3,500 target since about May of 2020 when the price was sitting at about $1,600. And that's very, very exciting if you're in the gold market. We've been on a massive tear. It's up year to date 13%. The last year 36%. The last 5 years 88.22%. In the last 5 years, and that is very, very that's a very big move for the physical metal. A bullion, it's almost 1x itself over the last 5 years. I believe there is massive upside in the next 3 to 5 years, where after we clear our $3,500 target, I believe the next target after that is $5,000 in the price of gold bullion. And I think silver bullion is at the start of its next massive rally, and I think it's going to hit $50 to $100 by the end of this current pump for what it has to do to catch up to where the price of gold is at and where the price of gold is going. Watch these Bitcoin price levels. What happened in crypto today? Nobody cares. Crypto trading doubles to 58.5 in 2024. Why buying it? Who cares? Worst crypto cycle ever. Commodity community and history saw otherwise. Nothing really interesting in here. Here's something. U.S. Donalds to introduce bill codifying Trump's Bitcoin reserve. A new bill set to be introduced to Congress aims to formalize President Donald Trump's executive order establishing a U.S. strategic Bitcoin reserve, a move that could further integrate Bitcoin into the national finance strategy. Trump signed an executive order on March 7th to use Bitcoin seized in government criminal cases to establish a national reserve. The legislation introduced by U.S. Representative Donalds seeks to ensure the Bitcoin reserve becomes a permanent fixture, preventing future administrations from dismantling it through executive action. For years, that's very important. When you see presidents sign executive orders implementing or taking away something, the next president that comes in, because it was done via executive order, can be wiped out and erased just the same on their first day, unless you do it legally. And that's what this Representative Donalds is trying to do, to get it passed and passed in the law of the legal way, so an executive order won't be able to take it out on a future president if they don't like it, right? So it's very important to understand the difference between putting rules and laws in place legally versus executive powers. Because you sign it in via the pen, you can erase it via the pen. If the bill is passed, it would ensure the strategic Bitcoin reserve and the U.S. digital asset stockpile could not be eliminated via executive action by a future administration. As Vincenzo just went over the differences, the bill would require at least 60 votes in the Senate and the House majority to pass, with Republicans holding the Senate majority, and aimed a generally more crypto-friendly environment. The bill has a chance of passing. According to BitLaw data, at least 23 U.S. states have introduced legislation supporting Bitcoin reserve, reflecting growing state-level interest in integrating crypto into fiscal policy, a pivotal moment for U.S. crypto regulations. The bill signs the U.S. government intends to integrate Bitcoin into its financial networks. It builds on Trump's earlier executive action by providing a statutory backbone, potentially clarifying the government's stance on digital assets. If passed, the bill could reduce uncertainty that has long plagued the crypto space, where agencies like the SEC, the CFTC have often clashed over jurisdiction. A codified reserve might encourage a more cohesive regulatory approach, offering businesses and investors a clear path forward, he added. So that's very important, very interesting. This was just your noon lunchtime quick update. We'll have our normal longer video talking about some fiscal policy and then going more into the news and the charts. Comment down below, become a member of the growing movement. Our road to 10,000 subscribers starts with you. The Rex Eyebrow J. Peace and love.